Welcome back. Let's take a look at the business headlines we're covering tonight. Toyota's U.S. sales chief, Jim Lentz, says that March sales will likely to be up 35% on a year-over-year basis. That's because the Japanese automaker offered big incentives to lure back customers following that massive recall. Lentz says Toyota is still considering extending 0% financing and other incentives into the month of April. Automakers are getting ready to report those March sales results on Thursday. Nissan announcing its new electric car called the Leaf will have a base price of just under $33,000, but that cost can come down to just over $25,000 because of a $7,500 electric vehicle tax credit. The move could start an electric car price war. GM's Volt is expected to price about $2,500 more than the Leaf when both cars are released later this year. And McDonald's announcing plans to double its presence in China over the next 3 years to 2,000 restaurants as the fast food chain tries to cash in on China's $300 billion a year informal dining market. To help train all the managers it will need for that expansion, McDonald's opened its first hamburger university in mainland China today. Hamburger University. Home prices are still rising, but the pace is slowing down. The Case-Shiller Home Price Index was up in January for the 8th straight month. It is down 0.7%, though, from a year earlier. With the home buyer's tax credit near expiration and the Fed nearing its MBS purchases ending that, is the market going to be stable enough to support itself? Let's get the perspective now of Christopher Mayer. He's Senior Vice Dean and Real Estate Professor at Columbia University Business School, and Fred Glick, President of U.S. Loans Mortgage. Good to have you on the program, gentlemen. Welcome.
Welcome, Maria.
Chris, does a slowing rise in home prices mean that the market is shakier and that we are just sitting at the bottom rather than rebounding?
Yeah, I think that's a pretty good interpretation of where we are at the moment. You know, I think it's really hard to see what much of a catalyst up is going to be, and so I think we're going to sit like this for a while.
Fred, how would you characterize things right now?
Yeah, pretty much, pretty flat, pretty boring. As I've said a million times on this show, jobs, jobs, jobs is going to bring buyers into the market is really the bottom line. As long as we have them, people are comfortable, they'll buy a house.
Mm-hmm. Well, there's been so much talk about the Fed ending the MBS purchases and what it could do to mortgage rates. Has the market already priced in the end of that program, you think?
Absolutely. They've known for about 3 or 4 months. So that the Fed, I believe, is smart enough to know there's going to be buyers coming in on April 1st who will be replacing them. And they've also said that if it does slow down again, they'll be back in the market. So I'm not worried about mortgage rates. Maybe they go up a hair, but they're going to basically trade in a range, and the supply and demand features are going to equal each other out.
Well, coming from the low levels that we're at right now, you can't imagine that we're going to see all that major moves in terms of rates, because even if we double, we're still talking about great numbers. So, Chris, if the housing market does take a turn downward after the end of the Fed's program, does the Fed come back and likely support it again? What happens then?
Well, I think Fred's right. There's no way the Fed is going to let problems in the financial markets with regard to mortgages bring down housing. My concern is not so much the Fed stopping buying, bringing rates up. It's rates rising overall. So Fred is very much jobs, jobs, jobs. I am rates, rates, rates. And, you know, I think that there's lots of evidence that long-term rates have a very big effect, and we know that the 10-year is at an enormously low level. If that 10-year starts to rise, either because of inflation or because of growth, which could be related, I think both of those would be very bad news for housing. The expiration of the tax credit is another thing, a double dip in the economy, foreclosures picking up again. There's all sorts of headwind that I think are going to make it very hard for the housing market to get a lot of traction upward nationally.
Yeah, it's a great point, because that expiration of the homebuyer tax credit is sort of the other looming cloud out there. There's been very little talk about extending it again. So from what you're seeing on the ground, Fred, has it really spurred buyers who otherwise would not have made the purchase?
This is going to be Christmas in April. I think people who...
Alex, I can't hear a thing.
Can you hear me?
Yeah.
Okay. This is going to be Christmas in April. People are going to be running out and buying houses, but they would have bought anyway eventually. It's just a question of they would have bought 2 years from now, or they would have bought now, pretty much. So prices are going up just a hair because of supply and demand features. But after April 30th, I think you're going to see prices come down, and nothing's really going to come back in a big force like we have now because of the credit until everybody's comfortable with jobs. I'm going to go back to it again and again.
So,
Sorry.
Chris, yeah.
But one point about what Chris was making with rates, I think what's going to happen if rates start to go up, I think the Chinese are going to do what they did last time, and they're going to buy our mortgage-backed securities so we can go and buy their stuff that they're manufacturing to put in our houses. And I think that was a really big reason that rates stayed low for all these years.
Right. That didn't turn out so well last time, and
but I think they're going to figure it out this time.
All right, gentlemen, great conversation. This is a market that obviously is not going to reverse overnight, and we've got lots to explore and examine here. Gentlemen, we'll see you soon. Thanks very much.
Thank you,
Thanks
Maria.
for having
Thank
me, Maria.
you. Up next, should the government keep propping up Fannie Mae and Freddie Mac, or is it time to pull the plug? We're going to take a look at that story next up.
Time now for Going Global Asia.
We're just getting started in Asia, and here are the stories to watch. We'll be watching out for economic data out of Australia today. Retail trade and building approvals are expected to add to expectations of another interest rate hike next month, especially after hawkish comments from the Reserve Bank governor earlier this week. Swinging north, another round of economic data out of Japan. This time, we're looking out for PMI numbers for March. Despite growing concerns that Japan is mired in deflation, this week's tranche of economic numbers has indicated a stronger than expected recovery in the economy there, and analysts expect